Good morning, good morning. Thank you guys so much for tuning into today's live stream. I apologize for not being able to be online yesterday as I was away for a workshop pretty much all day yesterday. It's good to be back. And let's begin today's live stream with a look at the economic calendar here. So today we have not much. We have existing home sales and we have crude oil inventories. Other than that, nothing too exciting. Tomorrow we are going to have unemployment claims, flash manufacturing PMI, flash services PMI, and yeah, so I think that's going to be probably the most impactful news this entire week, to be honest. And from going into next week, we do have FOMC on Wednesday, July 30th. They're gonna release, if we are going to change the federal funds rates, which is going to affect the short-term interest rates. If we cut interest rates, then that's going to be essentially beneficial for borrowers. It's going to stimulate the economy. The whole idea is that, there's going to be cheaper borrowing. People are going to want to borrow more, which ends up stimulating the economy, promoting growth. But also, if there is an over this whole idea of an overheated economy, which growth kind of leads to, it's going to lead to price inflation, which is going to be combated by a hike in interest rates. But I don't believe in the next FOMC meeting that the Feds are going to cut the interest rates. In this July meeting, I believe we had pretty inflationary news here last week about CPI and PPI. CPI rose to 2.7, and which is a pretty big jump, right? That's like 30 basis points. And so I think if inflation rose like that, or I guess inflation indicator rose like that, I don't think the Feds are going to really be forced to cut interest rates due to, the big orange man's demands. I'm referring to Donald Trump. But yeah, so coming into today specifically, nothing too exciting. And let's get right into the technicals here. And so coming into today, this is the daily candle from yesterday. So the way that we closed here on this daily candle, to me, I don't necessarily have a bias of higher prices or lower prices based on the way that we closed, to be honest. This to me is I would say like an indecisive candle, and I do want to draw your attention to ES's candle too. So ES, we have taken out the daily high here. So we have taken out the previous daily high on ES, and we also took out and created new all-time highs here on ES. So with ES taking out previous day high and taking out new all-time highs, I don't necessarily have, that to me really confirms the idea that I'm not going to have a bias, right? Because if ES has taken out previous day high and NQ hasn't, then there is that, SMT divergence, and I can't really force anything on the daily time frame here, specifically on NQ. With the matter of SMT, this allows, because there is SMT, this allows for a potential reversal. If we do end up seeing lower prices here, it's valid because of the fact that we do have SMT, right? So what I mean by this is, so NQ, we haven't made new all-time highs here during the London session, right? However, on ES, we did make new all-time highs. On ES, we went above this high right here. And so the fact that we didn't do that on NQ means to me that there's some sort of manipulation, and this allows for a potential reversal in prices, right? So it's valid to see a reversal in price, right? So if we end up, trading lower here, then I wouldn't be too opposed. It's understandable if we do end up reversing. And yeah, so that's kind of my idea here coming into the morning session today, right? So like I stated, I'm not going to utilize the daily time frame. And so the way that I'm going to approach this morning session is utilizing, the 4-hour candle, utilizing the 8-hour candle. So depending on how those two candles close will give me a bias. If we end up closing bearish here on the 4-hour candle and the 8-hour candle, then I will be targeting the 4-hour low slash the 8-hour, or slash the 4-hour low slash the 8-hour low. If we close bullish, then I'll do the opposite. I'll be targeting the 4-hour high and the 8-hour high. It depends on how we do close on those two candles. So, we have about 24 minutes left until we do close on those two candles. So I'm not like entirely urgent on having a bias or anything like that. I'm not going to try to force anything here coming into today, and just being a lot more nimble. If we do end up seeing this, reversal in prices, I would say, then the low, if we do continue lower, then I would like to see us possibly get into this, discount level here of this daily dealing range. So from this swing low to this swing high, there's a premium level and a discount level, right? Imagine discount is this really big red box, and premium is anything above that red box, right? The whole idea is, if there are buyers here in the market, they haven't had the opportunity to be able to buy in discount yet, right? In this specific low, in this specific high, the buyers did not get a chance to be able to buy in discount. And so that's kind of like the lowest, I wouldn't say it's okay, or like, I guess it's reasonable for us to continue lower here if we do end up showing signs of lower prices. So if we do end up seeing lower prices, then this could be an objective of mine, which is to retrace back into discount. We haven't exactly shown that just yet, right? My best bet is probably waiting for the daily candle to close, and once that daily candle closes And if we do end up closing bearish without completing the discount objective, then I would consider, you know, forming and structuring out an execution. But if prices doesn't permit, then I'm not gonna force anything, right? So that is something that's a, you know, possibility here. And let's take a look at the monthly here. We haven't exactly really moved that much coming into July's monthly candle here, to be honest. It's pretty indecisive, I would say. And I mean, we still have 8 minutes, or not 8 minutes, but 8 days left until the monthly candle closure. So I wouldn't exactly force anything. I'm not going to really state anything here, but just watch how we do end up creating this monthly fair value gap. And if we do end up closing here on July below June's high, then I would consider the fact that we could end up rebalancing into this monthly fair value gap. If July's closure, July's closure is above June's high of month, then I would treat this inefficiency here on the monthly time frame as a breakaway gap. But I think that's a little bit further into the future. Not exactly trying to, like I stated, I'm not really trying to force anything here just yet. Just being a lot more nimble and understanding the fact that I'm not going to try to really force anything here. So we have about 20 minutes left until the closure of the 4-hour candle and the 8-hour candle. Here I did notice that we did retrace. So like, let's take a look at that discount level again. So we did retrace back into the discount of this specific dealing range, right? From this swing low to this swing high. So that dealing range has been retraced back into. And so I can't really target the discount anymore because it's already been completed. And yeah. I think now I do want to go over some of the pros and cons here with you guys. So, give me a second. Alright, so the pros and cons from the week of July 14th to July 18th. First thing I do want to mention is, you know, I am continuing, I need to continue to take consistent setups. Every single setup that I take, I require a higher time frame objective, a model, and a entry pattern. I'll go over what these three, you know, components are. Just keep in mind that there are always going to be three things that I look for before pressing the button. If I'm missing one of those components, then I'm not going to execute. I'm not going to press the button at all. There's three things that I look for in a consistent setup. Second, I have to make sure that the fair value gap that I use can be treated as a entry pattern. It depends on the way that we created the fair value gap, right? So refer back to what I meant by rebalancing the monthly fair value gap and not rebalancing the monthly fair value gap, right? It is dependent on the third candle's closing price if we close below or above the second candle's high in bullish setups, right? So I can go more into depth about that later once I do a little trade review with you guys. But paying attention to your fair value gap and asking yourself, should this fair value gap be rebalanced, and are we respecting the consequent encroachment of the fair value gap if I am in a setup? Third is to utilize every single time frame to my advantage, right? Every single time frame is going to have its own objective. And I mean, I'm sure you guys have picked on or, have, picked up on this, but the fact that I'm able to utilize the monthly time frame, I'm able to utilize the daily time frame, I'm able to utilize, the weekly, the intraday time frames, the 4 hour, the 8 hour. Every single time frame has its own objective. The question that you ask yourself is, should we be targeting, the 4 hour low or the 4 hour high in a 4 hour setup? Same thing on the 15-minute time frame. Should the next 15-minute candle, should we take out the 15-minute low, or should we take out the 15-minute high? Same thing on the daily. Should we be taking out the daily low, or should we be taking out the daily high? Those are the questions that you want to ask yourself on every single time frame, as time is fractal. Once you can begin to piece together different time frames is when you can really establish a firm understanding of what the entire story is trying to tell you. The last pro is you want to pay close attention to SMT, right? So today, I noticed that, NQ, we haven't taken out all-time highs yet. However, like I stated before, on ES, we did take out all-time highs. And so because of that fact, I'm not going to be utilizing, or I'm not utilizing, but I'm going to be more accepting towards the fact that we could end up reversing, right? Because there's a presence of SMT. I have to respect the fact that we could reverse if we do have that SMT, right? And it's just something that you do want to pay close attention to, before a setup and during a setup. It tells you a lot of information, right? Whether or not we should continue in a specific direction, or there is a more probable chance that we should end up reversing in a opposite direction. And so to really sum things up here for the improvements here coming into this week, consistent setups. Every single setup that I take from now on is going to have these three components that I look for: higher time frame objective, a model, and an entry pattern. This makes it to where every single setup that I review with you guys are essentially the same. The only thing that might be different from one setup from the other is that there might be different price points. I'm utilizing different time frames, but they are all going to have the same blueprint, right? I have like basically created a blueprint for myself. Now I'm just like with every single setup, it's gonna be different, but very like increment. Like the differences are going to be very small. But yeah, so take consistent setups. Second is you want to pay close attention to SMT, like I stated before. Watching closely between the relationship of correlated assets is going to tell you a lot of information. Third, you want to, or not you, but I want to be more proactive, be more present. Yesterday, I really couldn't really do anything about that because, I wasn't even in front of the charts to be present for any possible setups. But today, there's pretty much no excuse for that. And yeah. Fourth is pay close attention to the fair value gap, to the entry pattern. And the last thing here is I want to track my 10K journey. Every single execution I take, I'm going to definitely journal it. I'm going to journal, the reasons why I took it, the 3 reasons why. Higher time frame objective, model, entry pattern. I'm going to record, the numbers part of it too as well. What's the risk to reward? What am I risking? What is the reward? How much contracts did I end up taking? And yeah. And so that's basically the pros and cons here for today. I think I have enough time to go over a setup so in this 10K journey here, I've only taken 3 setups, and I started June 6th, 2025. So a little bit over a month now. I've only taken a span of 3 executions, which is, which is fine. With the way that I see it, I'm just being a lot more disciplined in my approach, a lot more patient, definitely. And I think this is like pretty commendable, to be honest. I remember whenever I first started this whole thing, I would go into the day trying to force things to happen, but now I have a clear set of rules that I follow, and I only execute whenever there is those 3 components and extras. But enough of that. Let's begin, the analysis of this setup. So the first thing that I want to mention here, or I guess the first thing I do want to start off with, is the higher time frame objective. It is essentially like the bigger reason for why prices should be continuing in a specific direction, right? So imagine the higher time frame objective as like a really big magnet. The magnet magnets pull other metals towards them, right? It's a force of attraction almost. And so view the higher time frame objective and the model as 2 different magnets, but they are both in support of the same direction. The higher time frame objective being the bigger magnet, and the model being a relatively smaller magnet, right? But they both support the same kind of idea. So the higher time frame objective for this specific trade or a setup is retracing back into the premium of this dealing range here. So from this swing high where my mouse is and to this swing low, there is a dealing range, like I stated. In different dealing ranges, there's going to be different sellers and buyers. In this case, the sellers haven't had the opportunity to be able to sell in discount, or not, sorry, and sell in premium. And so if we do end up, suggesting the idea of higher prices, which we are, I'll get to that point later, the highest price, or like, I guess I wouldn't say highest price, but the low hanging fruit is this discount, or I guess premium level here. And so that's my higher time frame draw of liquidity, right? It's for, I want to see prices retrace back into the premium. And so the way that I align myself with this bullish higher time frame order flow is based off of the 15-minute time frame / 30-minute time frame. So you want to pay close attention to how we closed here on this 15-minute candle and this 30-minute candle. With the way that we closed here on those two time frames, I can anticipate that the next 15 minutes and the next 30 minutes should take out that 15-minute high / 30-minute high. And so that's kind of how I align myself with this order flow here. And so, yeah. That's my model, and that's the higher time frame objective. The whole idea is after we take out the 15-minute high, which is the same high as the 30-minute high, we should expand higher towards the premium level, which here in this picture, it looks like it's the same thing, but I'll show you guys that it's not. And so here is the 1 minute time frame. So going from the 15-minute model, I am allowed to go into, any sub 5-minute time frames. So like the 5-minute, the 4, the 3, the 2, the 1 for a entry pattern. And so I mark out the 11:30 opening price. And so the whole idea here is I want to be a buyer below this opening price, right? Because I'm anticipating the next 15-minute candle to take out this 15-minute high here. So if I'm anticipating that the next candle should take out the previous 15-minute high, then I am essentially betting on the idea that we should be creating a bullish candle. And in bullish candles, the best buys are going to be below the open. And so notice where my buy order is. Essentially, it's going to be below the open at a 1 minute fair value gap that could be rebalanced and should be respected to take out the 15-minute high and expand higher towards the we should respect the 1 minute fair value gap to take out the 15-minute high and expand higher towards the premium level of the dealing range. And so let's see what happens here. We rebalance into the 1 minute fair value gap. We take out the 15-minute high, and then we expand it higher towards the premium level of the dealing range. So that's, execution. Notice how there were three things that I looked, or I guess three things here in this specific setup that kind of were like the three pillars: the higher time frame objective, a model, and a entry pattern. There were other things that I used, such as, noting the opening price, buying below the open, having standard deviations here for, any possible extra targets, you would say. And yeah, so that's pretty much gonna be all for that execution. Very, very simple setup. And yeah. So to, I guess, get back into the execution here, or I guess not the execution, but for the live technicals, we are about to close here on the 4-hour candle and the 8-hour candle within about a minute. With the way that we are closing here on this candle, in this candle, I can anticipate the idea that we should take out the 8-hour low slash 4-hour low, right? And because the 8-hour low is the same low as the 4-hour low, which is the same low as the hourly low, I can anticipate that we should complete this objective within the next hour or so. That's the idea. Coming into the morning session today, I am seeking lower prices, and depending on how we close here on this depending on how we close here on this 15-minute time frame will tell me if we should rebalance into this 15-minute fair value gap, or if we should treat it as a breakaway gap. If we close below this blue line, then I would treat this fair value gap here, this red box, as a breakaway gap. So let's take a look. Where is our closure? Here we are. That's the closure. And we did close below the blue line. And so coming into the morning session today, I would anticipate that we should complete the 4-hour objective within the next 15 minutes, which we did do that just now. And so the fact that we just completed the 4-hour objective here and the 8-hour objective here means that I'm not really going to have that my morning objective, or let's not say morning objective, but my 4-hour objective and 8-hour objective has been completed. There's no need for me to really force anything else to happen here on these two specific time frames. And so yeah, that's pretty much all that I have here for today, right? What I'll leave here with you guys is you want to pay close attention to how we close on the 6-hour time frame. Depending on how we close on that 6-hour candle will give you another objective, right? It will give you either if we should be targeting the 6-hour low, or if we should be targeting the 6-hour high. And yeah, that's going to be all for today. Thank you guys so much for tuning in, and until next time.